Welcome to Freed on Business. He grew up in South Florida, has been in business here since the early 90s, and has closed over $3 billion in deals. He's seen it all. He always has an opinion, and he's always ready to share it. Informed, entertaining, and connected, he has his finger on the pulse of South Florida's business community. He's Jim Freed, and this is Freed on Business.
Hey, everybody. Welcome to another great edition of Freed on Business. This is episode 814. I want to thank our friends at Warren Henry for sticking with us for so long. Remember, we're streaming live on LinkedIn, YouTube, Facebook, Twitch, and Instagram. Look for us at Freed on Business or at Jim Freed. Again, I want to thank our friends at Warren Henry Automotive. They've been with us for, 12, 13 years at this point. Thank you to Larry, Eric, Ismet, everybody over there. They treat us like gold. They'll treat you like gold as well. Somebody else who treats their clients like gold is our guest today, Ed Cairo. Mr. Mendoza, where is Mr. Cairo? There he is. Look at him smiling there.
Hi, Jim.
Hey, Eddie. How are you?
I'm doing good. How are you?
All right. How's your brother? I know your brother's been through the mill here.
Yeah, he's a month out of surgery, and he had some major back surgery, and he's turned the corner this week, and he's doing great.
Well, I know that you've been spending a lot of time with him, taking care of him. And I know that while you're doing that, you're still closing deals and that you treat all your clients the way you treat your brother and the way you treat me, too. So thank you for that.
Thank you.
I'd like to talk a little bit about, the deal that you just closed. I want to thank you so much. Just in case people don't know, I have a business relationship with Ed and his family. They've been residential mortgage brokers for many, many years. And whenever I have a client that needs a residential loan, I put them in touch with Ed, and Ed treats them like family. It's a business relationship that I truly cherish. Ed, just a couple seconds on you and your background in American Home.
Well, I've been in the mortgage brokering business for about 25 years, and I started out on my own, and then my older brother Paul joined me, started processing and doing the loans, and then my younger brother Greg has joined us since. So the three of us, three Italians, mortgage brothers, we call ourselves, and we have a nice little system. Usually when the loans come in, I structure them. My brother Greg, my younger brother, is an IT kind of guy. He'll do the processing and that type of thing, and then my brother Paul is the closer. So he'll finish up the loan. He'll go over the final loan documents with the clients prior to closing. We like to make sure that they understand all the numbers before closing, so there's no question when they're sitting at the closing table. We'd rather walk them through it properly than have a possible title person that does another deal try to explain it to them. So that's what we usually do.
So I have 35 plus years in large-scale commercial mortgage brokerage and investment sales. I have a lot of friends and a lot of clients that call me and ask me for advice on the residential mortgage market. And rather than stepping outside of my comfort zone, I do basically the same thing I do in commercial. I refer them to the expert. I almost never know the answer to a question, but I always do know the person to call. And on the residential and I call you, one of my very good clients that I've closed a number of deals with in the past referred me to somebody that actually leases space from him, and you just closed a loan with that person. So tell me a little bit about what's going on in the mortgage market right now, because we're sort of still in a stable position. Where has the market settled in, Ed?
Well, the market's down to, rates are probably where they were in August, maybe a little bit before that. They're starting to come down a little bit. I think people are starting to realize that this is kind of where they're going to stay for a bit. And, the good part from a lot of people is that the home prices have been coming down of late. There's a lot of inventory on the market, and not everybody qualifies for all these homes. So, the question really is that, do you wait for the lower interest rate possibly and pay, 30% more for the property, or you just pick it up now? And if the rates go down, you refinance it and get yourself in a better, financial position.
Now, one of the things that people may or may not realize is that the easiest loan to close is what you call a QM, a qualifying mortgage, that's a mortgage that one of the government agencies is qualified to purchase, and that the amount of that loan has gone up dramatically. Ed, what is a qualifying amount that somebody can get one of these government insured loans, which, by the way, is the loan that will qualify for the lowest interest rate and the highest percentage of proceeds, by the way?
Yeah, you're approaching almost 800,000 nowadays. So it's definitely up there. And then the other type of loan would be a non-qualifying loan, which is something which is not a government purchase loan, and that's a very, very busy segment of our market nowadays. Not everybody can qualify, especially if they're self-employed. There's a lot of write-offs, so on and so forth. They're making money. It's just that their tax returns may not reflect the kind of income that they're, making because of purchases of businesses and, other things, equipment, etc. So as long as, there's some different factors like how much money they're depositing, we can use their business deposits, take 50% of the business deposits. We can use that as income. If they have a lot of money in the bank, we can do what they call an asset depletion loan. So, as long as they're at 80% or better or lower, I should say, we can use that. There's a formula we use to, help them qualify. As a matter of fact, anybody, even if they do a qualifying loan, if they don't make quite enough money to qualify, and let's say, as an example, they have, $750,000 in the bank, we can apply the formula and use some of that money to help them qualify with their W-2. So there's a lot of little nuances that you need to know to be able to get these people qualified today, because it's a little tougher than it used to be, obviously, with the insurance rates and the interest rates and so on and so forth.
A couple of things that I've found to be real good bellwethers for whether or not somebody can get a loan is A, their credit rating, and B, I'll call it their trend on income. What's the minimum credit rating for the best quality loan, and then what's the next break point, and then how many years do they have to have this income trend so that they can qualify for the best loan?
Well, the minimum income the minimum credit score would probably be about 620 or above for most loans, and with that comes a little bit higher interest rate and it's a little more risk to the bank. As far as the amount of time on the job, they're looking usually for 2 years. That's what FHA.
So 2 years on the job, or 2 years on the job, or 2 years of upward trending income. And what's the break point for the best type of loan? 720, 750? I don't think anybody has really 830 or 850.
Yeah, no, not really. 750 and above is usually where that's going to be as good as you're going to get. And it's like a car loan. If you have a 720 or a 675 or less, there's a couple of hits to the interest rate, and everything is based on risk to the lender. They have all these models, and they know a lot more than we do about this. They've been doing this forever, and so for the most part, if people are planning on buying a home, they really have to pay attention to their credit and their assets, early. I would start, 6 months out or a year out, and really try to get their credit in line and keep the debt load down as much as possible, because that's going to count against you. The student loans and the credit cards and the car payments and all that stuff, that's part of the reason why some people don't qualify, because they just have way too much debt.
So let's use an example that you just closed last week to help my friend out, actually my friend's friend.
Mm-hmm.
What was the property type in general? Where was it generally physically located? What property type was it? This was a self-employed person or a person that owned their own business.
Oh, yeah.
What were some of the pitfalls that you had to address? And let's be generic.
Yeah, generic, absolutely. Very complicated loan. Very, very nice person. Very willing to work together to get this thing done. Whatever I asked this person to do, it was done, no problem. And what really happened was, it was up in like Jupiter area, and it was a townhouse that was 850,000. And this person wanted to do a 90% loan on that, so we were able to get her qualified for that. The only thing was that there were two different businesses involved, and one, and again, we're being generic, so I could just say this, but one, she owned less than 25% of the second company, which she had for 20 years. And we were doing a loan that qualifies with a 1-year tax return, which is a Freddie Mac loan, which we were able to do because as long as you have a company for more than 5 years, you can qualify for this, and didn't have to bring in. She hadn't done the 24 tax return. She had the 22 and the 23. 22 was a little bit less money. 23 was a little more money. So we were able to do the loan with a 1-year Freddie Mac tax return. Well, it turns out that the second job, because she had less than 25%, required a second tax return, which had we done that, probably wouldn't have qualified, for this particular financing. So it turned out that what we ended up doing was I was able to get the K1s, and I got to be honest with you, I had to argue with the underwriter probably for a week straight, went to his superiors because he wasn't right. And this is what happens. These underwriters today are not always right about everything. And, I found the guidelines, I sent it to his superiors, and it turns out that I was able to get the K1s, which are on the corporate return. That's what pays, comes over to your 1040, your personal return. And without having to bring in the 22 return, I was able to take the K1s from the two years, the 22 and the 23, to show that she was in business for X. And then I had to get an accountant's letter, what percentage, et cetera. And then also we took her, this particular person had, she had IRA money. So she was taking an IRA distribution. So I had to get some documentation on that. So we combined not only the first job, the second job, but we also combined some of the IRA distribution into this, and that's how we got her qualified. It was pretty tough to go, but it worked out in the end.
Well, Ed, let me translate that into person talk, because that was pretty much in the weeds and pretty technical, and you kind of almost lost me.
Sorry.
But I really understand exactly what it is. You were the person's coach and the person's advocate. Yes. And that's really what people need in today's world, because nothing's really straightforward. You go to your banker says, I can do that. Then they call you back a couple days later and say, I really can't do that because of a variety of reasons. And so then somebody needs to find somebody that can coach them through the process and advocate for them. And, I know for a fact that some of the things that you do to coach them through the process are helping them clean up the way that they look. You alluded to it earlier, cleaning up the way they look on their application by bringing in the right amount of income, the right quality of income, the right indicators of income and ability to repay, because it's really about the ability to repay the loan. Mm-hmm. Then you need to advocate for them, because sometimes the person that's the entry point at the lender, it really isn't as qualified to advocate for them as you. Now, Ed, you're really doing this with banks. You're not doing this with any kind of secondary private lender. These are still banks.
Absolutely. These are banks. And, today a lot of these underwriters are trained on specific things, and they'll have, combined underwriters. So each one does a different task, let's say. And it just seems like of late, the old underwriter, that knew the whole loan top to bottom and they knew everything about the business. That's kind of gone nowadays. And now we get these specialists that do special things per loan. And, you just can't take their word for every little thing that comes through, because they don't always know all the guidelines. They try, they research it. But when you know something is right, you go to bat for your client and you find the information, and then you go to a superior and you get it done. And that's what we did. Had we not done that, she wouldn't have closed.
Wow, that's terrific. Ed, I want to thank you for helping my friend and his friend out with the mortgage. It is the biggest investment that people make, and it's something that they need a real advisor for. It's not something you can really get done on your own, and a lot of times your personal banker doesn't know what they're talking about. We're going to be right back with the bottom line with Ed Cairo right after this. Mr. Mendoza, it's time for you to do your thing. Just like Mr. Mendoza shows the barista craftfully crafting the beautiful coffee, Mr. Cairo crafts your loan, and of course our friends at Warren Henry, they craft your other big purchase or lease, your car. In today's world, it's getting more and more difficult to get yourself across the finish line, to get that vehicle that you need, and to service that vehicle afterwards. And the experts at Warren Henry are, well, for us and for me and my friends, just like family. I want to, as always, thank my friends at Warren Henry for working with me and my clients and my family. Larry, Eric, the whole team over at Warren Henry is absolutely terrific. I want to thank them all. I want to make sure that everybody knows that no matter what you need, our friends and family at Warren Henry will treat you right. Up in Gainesville, they sell out. He's down in the Keys. They've got a store that sells everything. In West Broward and South Dade, they've got their award-winning Land Rover, Range Rover stores. And of course, the flagship store is at 151st and Biscayne, where they sell Land Rover, Range Rover, Jaguar, Infiniti, and Lincoln. All great cars, all great service. They come with the Warren Henry Advantage, which means you get a whole list of wonderful things, including a great service advisor. And if you need it, they'll get you a loaner car as well. So remember, always the best price, always the best service, always Warren Henry. I want to remind everybody you can reach out to me. I work with families all across the world and right here in South Florida. I've got calls all day today helping families that know each other get together and do real estate deals all day long. Remember, whenever you call me, it's always all about you. Reach out to me and let me help you put together your real estate and business transaction. You can reach out to me on the phone or by emailing me. And remember, whenever you call me, it's always all about you.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
Well, we're here with our residential mortgage expert, Ed Cairo. I want to thank Ed for helping one of my friends just close a loan. We talked a little bit about it earlier in the show. Mr. Mendoza, where's my good-looking friend, Ed Cairo? Where is that man? There he is. There he is. Ed, I think that I can kind of lend the bottom line here today. You talked about making sure you have your credit cleared up and to make sure you're positioned to go get your loan. You talked about dropping the amount of money that, paying down your credit as much as possible. We talked about the fact that your expertise, you can help coach people and help them clear up their credit. They used to call it credit repair. It's really not what you do. You kind of help them and advise them on putting their credit report together. And then you coach them through the process and you act as their personal representative, helping the lender also figure things out. And what's the most important thing people need to understand about the residential mortgage market today?
Well, I think people watch the news and everybody's afraid of the interest rates and all kinds of variables, right? The house market is going crazy; it's going to collapse. This is all the stuff that you read. But I kind of think we're insulated down here in South Florida. People come into Florida from other places. And this market is a strong market. The interest rates are historically what the average interest rates have been for the last 50 years. So it's not like they're very high or they're going to be 2% anymore. I mean, it's like anything else. People have to have housing. They're either going to rent or they're going to buy. If they are in position to buy a property, they need to set themselves up properly to buy that property. And if they can secure that asset at these prices today, as opposed to 5 years from now, let's say, rates come down, we refinance them. So that's what they're going to live either in an apartment that they rent or they're going to buy their own property and create their own wealth. That's a decision they're going to have to make.
Well, I want to thank you today, as always, Ed, for coming on and telling people what I think they already know. The time to act is now. We're seeing that in the marketplace. Either you're going to be subjected to somebody else by renting, or you're going to control your own destiny by buying. If you have the opportunity and the capacity to buy, it probably is a good time to buy at this point, because things are relatively stable. I want to thank you, Ed. Mr. Mendoza, put Ed's email up there again, his contact information. There you go. So you can reach Ed at American Home Finance. They've got a little link on there that helps you see if you can qualify and to submit your information. It'll give you an overview. He'll coach you through and help you get it done. I'll remind everybody, if you missed something on today's show, you can check out the replay on LinkedIn, Facebook, Twitch, or Instagram at Jim Freed or at Freed on Business. Or you can head on over to the at Jim Freed YouTube page. We're on Apple Podcasts, Spotify. It really is cool to find that stuff. I'm sitting there with people and I say, hey, you can find me on Spotify. And there they go, and they do. Anywhere you listen to your audio, check out all of our other past episodes as well. I want to thank Warren Henry Automotive. I want to thank our friends at the Bergstrom Center for Real Estate Studies. We're going to have them on giving us some more insight later on this month. And I'm going to remind everybody that just like Ed and his team, the person wants to do something, finds a way, the other finds an excuse. Now go out there and make it happen. God bless you, Ed. God bless your family. And, of course, God bless America. Mr. Mendoza, show us some good stuff at the end there.